I explain to people all the time is like, we've already said it's a 100 vol asset class. It will have 75% drawdowns, and those are opportunities. Every time it does, it's a life-changing risk reward. So even if now, I mean, I think we all think the low is in, but let's assume it's not. Let's say there's another 50% downside from here. Well, the upside, when you get to these kind of levels after the sell-off, is about 10 to 20x. So 50 basis points downside, 10 to 20x upside is like, you know, Mooch, we've been in the business for a long time. You never get these opportunities in your lifetime. You might get one if you were lucky in some VC deal, but in an entire market that goes up 20x, and it does it periodically in this exponential trade, we never get this. And yet
we just did it. We just did it. Like, that's what I don't understand is, of course, the media comes in and the pundits and everybody starts criticizing it's a scam. March 2020, everything collapsed. Bitcoin went under 4,000 and went up 17x while the stock market did a 2x. This isn't even conjecture. You can literally say this happened 2 years ago.
Yeah. And it's still up 5x from that period.
Yeah.
Yeah. Well, I mean, so look, I don't know. I'm not, you guys are a lot cheaper than my therapist. So I appreciate you listening into the podcast. I was literally tapping on the podcast for like a half hour trying to get in. But my point is I'm going to stay the course. I'm going to continue to educate clients. I'm going to continue to explain to people that if you can delayer a society and you can take out middlemen of society and we can go peer to peer with our transactions and we can create a currency or a ledger, let's just call that's what a currency should be, that's not corruptible by policymakers or politicians. If we can do that, then market forces, being what they are, will gravitate to that because it'll be cheaper and it'll be more stable than the system that we're currently running. So again, maybe it won't fully adopt, guys, and maybe it becomes a store of value. But if it does fully adopt, like some of these guys think, I mean, this is a monumental time to be involved with this stuff.
And did you feel beaten up over the summer from clients and media and all of that? How did you deal with the psychological part of having to deal with the crypto winter?
It's a lot easier than working for Donald Trump. I mean, I got fired from the White House 5 years ago. They shot me out of a cannon and rolled me into Pennsylvania Avenue, right? Then they skinned me alive and then salted me with margarita salt. So very well prepared for it. You know what I mean? I'm not on every late night comedy show. I'm not being impersonated on Saturday Night Live because my Bitcoin exposure is down. You know what I mean? So I am built for this shit. You know, are you allowed to say shit on your podcast?
Yeah. Shit.
So I am built for this. I have no problem with it. But yes, I'm getting lit up by the media. I'm getting lit up by clients. I can't mention the name of the wirehouse, but I have one wirehouse that put a sell on my fund in April of 2020. The fund went up 61%. They then put a buy on the fund. Now, because of my Bitcoin exposure, they put a sell on the fund. And of course, the moment they put the sell on the fund is up 20% from the moment they put the sell on the fund. Guys, what are you doing? This is a long-term fund that has liquidity characteristics that are geared towards long-term investors. What are you doing? I mean, so I'm sitting here. I have to get on the phone with the investors and calm down the investors because we've got imbeciles in these wirehouses, not mentioning the name of the imbecilic wirehouse, but that are doing this. What are you guys doing? Okay. I mean, that's not the way you invest. I thought you guys were all disciples of Warren Buffett. You're supposed to buy the shit and sit on it, you know? And Raoul, you know this, Scott probably knows this. The best performing accounts at Charles Schwab are the dead people.
I know.
Dead people. Okay, because they're dead. They're not looking at the account. And, you know, when you're dead, you don't have that much emotion, I don't think, when you're looking at your statement. Okay?
Yeah, so then why are people viewing this asset class differently when everybody knows that the simple approach to making money over time is to just simply buy something and wait?
Because they're not used to volatility of this scale, right?
Right.
But volatility gives the reward, right?
Right.
So because it's a 70 vol asset, gives these 20, 50, 100x, depending on what time period you're looking at. And people just are not set up for that because they are mean reversionists. They think the world is cyclical and everything reverts back to where it was. So therefore, every boom has a bust and every bust brings it back to where it started. But that's not what happens here. It's in an exponential trend. So every bust is significantly higher. I mean, Bitcoin 4,000, Bitcoin 20,000. Okay. And that's low to low. I mean, that's extraordinary. But people don't see that. They're not used to it. They don't know how to deal with it. So people are having to learn. I mean, all of us did. I mean, I was shit at doing this because I never realized how in an exponential trend, buying and holding and adding into the big sell-offs is better. I went back and looked at all the times I traded Bitcoin from 2013 when I first got in at 200. I rode it up to, it went up to 2,000 to 1,000. So it went up 5x in 2 months. It went all the way back down 85%. I just held it because I wanted to treat it like an option. I wanted to see, and I had a 10-year view. And I said, listen, it's probably going to 100,000, worst case, 1 million, best case, over the next 10 to 20 years. So I held it. It went back 85%. It rallied all the way back up, and I got out during the forking wars in 2018, 17, and I've made 10 times my money and thought I was a genius. It went up another 10x and then came back down again. So it was fine. I went back and then I rebought in 2020 in that sell-off. I went back and did the maths on my much smaller position that I started with versus the much bigger when I really went in, irresponsibly long in 2020. If I'd have just held my original stake, I'd have made 5 times as much money by not. And I traded it well. I made money every time. And if I'd have just held it, I'd have made 5x. If I'd have just doubled, just keep adding my original stake every time it sold off in the big cycles and got down to that 5-year moving average, I'd have made 25x. I'm like, Raoul, you're a fucking idiot. Just
tale as old as time. It's like Beauty and the Beast, right? I mean, I mean, you've just described every basically attempt at trading versus investing for 99% of people.
Not bad at trading.
No, you actually made good trades. You made money. I mean, you were successful trading that.
And it was suboptimal. And that's the point here. We have to learn a different skill set. And the skill set is own it and buy into the sell-offs. And that's what tech investors managed to figure out a long time ago. Silicon Valley figured this out much before us macro bozos did.
Well, I will say this, that I watched this happen in the year 2000. In March of 2000, when the NASDAQ cracked and the tech bubble evaporated or was punctured, I have a generation of my friends, contemporaries of mine, that said they swore off technology, they swore off Amazon, swore off Google. I'll never touch any of that again. And yet they missed a generation, 22 years of the best asset class in American history. So I think we're there again, and I don't want a generation of investors who have been burnt by Bitcoin going from 69 to 20 or 17,000, or the Celsius situation, or Voyager, or the Terra Luna situation, to then swear off the entire asset class. Raoul, it would be like long-term capital management collapsed in 1998, and now we're done with structured credit and fixed income and distressed debt. You can't do that, And so I guess the real question is the rise in application. While we're talking about the markets and we're talking about how to handle the emotional volatility of your portfolio going up and down, I'm watching exponential growth in applications, whether it's the Ethereum merge, the Lightning Network, the use of the Lightning Network on the Bitcoin platform, all going up exponentially. So even though the volatility has pushed prices down, usability is going through the roof right now. And that's usually a very good fundamental sign.
Yeah, totally agree.
Yeah, Raoul, I mean, you were touching on that sort of conceptually earlier. It still feels like we're at the Commodore 64 level of personal computing when you look at the UX and UI and how difficult it is to use all of these things, which is a good thing.
And that's always the best time to invest, right?
Yeah, it's a good thing.
If you can make the case for the big picture future, and most people can't see it, That is the single best opportunity you will ever be given. So, you know, the moment the UX is solved and everything's right,
too late.
It's too late.
So let me just give an example of what you guys just said about Commodore 64. Okay, let's say, well, first of all, we couldn't be doing this in 1998 because we wouldn't have this George Jetson phone conversation. But let's say it's 1998. I've got my corded mouse and my fat box computer, and I'm dialing up on my modem, and you can hear the whirring and burring of my modem. And now it's taking 35 seconds for my landing page to arrive on my screen. And of course, it's AOL, and it says, "You've got mail." And there I am, and I'm going to buy a book from the internet bookseller known as Amazon. Right now, Raoul comes to me from the future, from 2022, looking very svelte, Raoul, by the way. You're coming in from 2022, and you're standing next to me, and you're like, "Hey, Mooch, you know what's going to happen here? You're going to be on a flat box or a smartphone. Amazon's going to become this colossal enterprise. And oh, by the way, it's taking you 35 seconds to land a page on the internet. Well, someday billions of people at the same time are going to be streaming 4K video over this platform known as the internet." And so when I talk to people about the blockchain, I'm trying to get them to think like that. You know, this is 1998. This is Commodore 64. And if you can just envision what will happen as these pipes expand and the applications expand and the traditional finance people have no choice but to embrace it, okay, it's going to be unbelievably transformative. And then, oh, by the way, there will be a demand shock for assets like Bitcoin.
Yeah, in 1995, when I was a freshman in college, I used to try to download pictures of Cindy Crawford, and I would have to go like away to 2 meals and sleep just to, you know, watch it go like this. But it's really incredible to think that was only 25-ish years ago.
Don't be rubbing it in